So this was gonna be a quick little update. Obviously, I hit a quick little scan this morning, during the morning session, but some things have changed. We saw some things happen that, you know, further aligned with my thesis, and now we have a little bit. I don't want to say predicament here, but my thought process behind a short side trade has you know flipped a little bit, right? Not necessarily flipped, but the idea that I had and the targets that I had, I don't know, within this time frame of this week if that's going to happen, and I don't know if the positioning that I was talking about as far as a couple weeks to a month out, if the risk to reward is necessarily there anymore, right? So, as I discussed, as I touched on this morning, we had a really notable footprint candle yesterday. I wouldn't say footprint as far as massive, massive selling, but as far as stalled progression, and a notable seller throughout that session, we had a really notable sequence that occurred and developed, right? Now, we opened up today a relatively weak gap, and we immediately saw that kind of seller off open, digestion, and draw being to the overnight gap fill, right? That's kind of when I closed the video off. We saw a lower high put in, and then we saw this massive, massive kind of 3 or 4 point breakdown or 5 point breakdown in just a span of like 30 minutes to a little bit less than an hour off of the Powell news, I guess. Something stupid. But what I want to discuss here is like, okay, this was a really good short, you know, adding in, maybe taking that starter positioning. And this has nothing to do, by the way, with that January position, right? The January position, in my opinion, is still completely valid, even if you take starters on June 11th. You just have to understand, like, the risk reward and the time horizon of your trade. I think the January position is still beautiful, especially if you take some ads here, maybe take some off of CPI, right? But maybe like not necessarily aggressive size and exposure quite yet. More or less just kind of like that, beginning to get that size as we approach this window, right? But it's more or less the fact that we had this breakdown happen and we took out all these lows, right? We took out the low from the 9th, the low from the 11th, the low from the 13th or 14th, and the low from yesterday, and we filled this gap from the 9th. And we have an insane amount of volume backing these two hourly prints from 9:30 and 10:30. And it's even so, it's the highest volume since April 9th, or April 10th, right? April 9th, actually, right? The highest volume since that reversion trade, since the close on April 9th. And, to me, especially after, this move being developed would have already resulted in a 6 to 8 point move just from, objective risk to objective reward, being from the July 3rd high that we saw that seller, and the July 7th or 8th closer from that Tuesday gap up, or Wednesday gap up, closing that Tuesday session. To me, that holds a lot of relevance and weight, and the volume backing such a sequence kind of deters me away from looking to milk this a little bit more. Um, like I said, the January position is still completely viable because, a potential new high is on the table for sure. I mean, this is maturing, right? This is a distributive structure as we trade above the highs and as we develop into May and June, in my opinion. But this definitely has potential to develop a little bit further. It also doesn't, right? That's the thing about these scenarios is taking your profit and leaving a little bit on the table just in case with the trailing stop, right? I don't mind if you build out, 8 contracts, covering 5, holding 3 with a break-even stop or a trailing stop above 626 on that August position, because if that move to 615 does happen within the next, I'd say 5 trading sessions, that's a pretty appealing risk to reward as far as giving back profit in comparison to the reward that you have on a position that already ran 50% into your first initial target, right? So to me, that's kind of the move here, right? The close today is going to be pretty pivotal, in my opinion, right? It really depends on how we close out. If we can establish this lower high, I will say that this price action that was developed throughout this range is, we see a nice pop and structure develop and another one potentially developing here. But if we can see a lower high put in, maybe a weak close, then I think we can push 615. If not, um, I probably would say that the shorter expiration puts may not be the most vulnerable quite yet. It's expiration today, so that's a big part in the volatility that we saw, the unpinning of those hedges, or unwinding of those hedges. But the closure here, it depends, right? There's a couple things here, right? One, we have a potential lower high. Two, we have a potential massive amount of hands changing in a large buyer off of an important spot, denoted by the volume and the subsequent structure that we developed at that spot and the way that it happened. And two, we also have a lot of names that can potentially revert higher, right? What I like to do that goes, this goes so deep beyond just price action and candlesticks and structures. It's combining all of these tools that you've developed, right, to develop a thesis on multiple different time frames, right? The financial sector, in my opinion, looks hideous, but this, pulling into this gap, seeing this nasty wick. I mean, I wouldn't say nasty, seeing this very, very bullish wick, this notable buyer with, once again, a lot of volume back behind it. We have a lot of these names kind of getting beaten up off the reports. JPM does not look good, I will say that. Little bear flag into the gap that we established on the 8th, and then off the report failing is pretty unappealing. But, we seen BlackRock digest that gap. Wells Fargo could pull into the gap. We have this gap established, right? We could see another high sold off, is kind of what I'm saying here, right? So when you look back at the quarter one distribution on a daily perspective here on the XLF chart, right, it takes a little bit. And the reason I like to use XLF and tech, right, I think it's pretty pivotal to understand, these are the two largest holdings in the S&P 500. These are two pivotal sectors that hold a lot of weight, and, and it's that risk on kind of asset per se. And they hold a lot of weight to the broader market. So when you see tech and financials looking bad, those risk on more volatile sectors, I guess XLF isn't the most volatile, but you know what I'm saying. It holds a lot of relevance and weight when you see these sectors developing distributive sequences, in my opinion, right? So we see the first initial high sold off. We see a higher low put in. There's a lot of volume backing this, but the subsequent second high, stall, higher low attempted. We don't establish a new high on this February 19th print. Keep in mind, this is when the broader market topped as a whole. We established this secondary low attempt, and then this another subsequent higher high sold off, right? Where this floor of an accumulation that's attempted at 51.74 is really not, or 50.75, 50.74 is really not producing the best result. The buyer here is kind of wiped, and we see that breakdown, and then the lower high develop after. And keep in mind, like I said, this is when the broader market topped on this print, on this February 19th print of this year. And you see how we kind of develop another higher high sold off after that. Things, it could take a while, right? We could see this push a new high, stall, create a floor within this range into August, maybe post-August expiration. Like it could take a little bit. We could see, um, this, and then that's kind of the high that sells us off, and then we see a lower high in the quarter one or something. But there's signs, there's red flags, there's opportunities. I said there's a big reason as to why I really like the January positioning up here. We are only 3.7% above the July highs or June highs, June 11th highs, 5% above the May highs, right? At the high of yesterday's session. But the way that this candle behaved and the way that this structure developed, I think it's something on that shorter dated expiration that I'm going to be pretty cautious about, that I'm very speculative about. Because keep in mind, I mean, this is still trying to time the top, but I do think that this is an hourly distribution. It's just one of those things that this is a little bit of an off-putting amount of volume and structure and relevance. And I don't, I think the risk reward is there, seeing how this closes potentially. But if I were to say, if I were to say have those Augusts from this 626 to 627 range, at like a 626 average maybe. Um, I think I would have taken the bulk of my position off down here and have a break even stop monitoring those close. And then, like I said, the Januaries have a little bit of room, right? We had SMH as well in a pretty big time spot. This is the previous all time high that we established in July of 2024. We can see we based it on the Monday print. We see the exhaustive gap up, and now we're kind of putting in what's potentially a higher low. That semiconductor space, Nvidia is one of those names in the UTAD phase where this doesn't have an opportunity I'd like on options. We don't know how long this is going to take, and that's a big factor for positioning in the options position as a whole on this name. Time. We don't know how long this is going to UTAD, but that Tuesday print is disgusting, and I think it's going to happen sooner rather than later. But we have no clear, even look at the hourly chart, even look at the 5 minute. There's no real structure and risk to reward there, and it's just patience, right? We have Google. Google looks really nice. This is a really big shares trade that I like, especially if we can, continue to base this earnings gap that was our resistance off the October report. We reclaimed that on the Willow gap, and then we broke down under it, and are now kind of attempting to base this this general area at 182 on a name that has a little bit of room left into it, right? We have this large peg up here. We have decent structure developing. We also have signs of exhaustion showing. That's why I think this is a commons trade. I think this was a commons trade down here, and I think it's been a kind of trim and add position that I really would be focused on for that reversion trade, getting a little bit more room. We have Microsoft. No clear-cut signal yet, right? Like, there's nothing that's very, very clear about this yet. Similar to back in March, February into March, right? This was building up the climaxes. The draw was to this January 30th gap, but we had nothing very, very clear yet. And then when we had that massive capitulation and change of hands, we had that buy opportunity at 350. We had a quick little 10% rally, 15% rally, where you can cover some of your position and then re-add on the subsequent consolidation that we have after and target that peg, right? There's no clear short-sided trade here, right? And there wasn't really much of an edge long side. I mean, if you want to build out positioning throughout this range, you're just going to have a little bit of drawdown. But the risk to reward's definitely there if it's just starter size. That's why I'm saying those January puts, I think, are very vulnerable here, especially because the bottoming of a sequence is more or less an event. You look at August, it was an event. You look at COVID, it was an event. You look at August 5th, April, that was an event, right? You look at April 2024, that was an event. You look at this, and you look at the top that we established Q4 and Q1 of earlier this year and late last, and you look at the 2021 highs, and you look at the 2000, you look at 2007, it was a process. It was being built out, and then it happened relatively quick and aggressively, right? And that's what I think is going to happen. I don't find myself being very fond. The Tesla weekly chart's not bad. The gap up and reclaim of the closure that we established, on the 3rd for the week of the 30th is not the worst thing in the world, but it's not necessarily um it's not necessarily the greatest daily structure for me. Definitely it does still have room though, I will say, but Tesla tends to be a name that could really potentially like outperform the broader market, as we have sometimes before. So it'll be one that I keep an eye on. Commons potentially could work here to 400, but I don't have the edge just quite yet on that daily chart perspective. Apple, I feel like 224. Meta, the exhaustive stall at the new highs is gross within the progression gap failure as well. But I don't have an edge on this chart just quite yet. I do think we probably see sub 600 this year. But there's not really much of a structure that I'm a super, super big fan of, right? This actually looked really good short side throughout this range. I thought we would see 550, but when we get the breakaway gap on the 12th and then the continued kind of distributive sequence, and Amazon, right? Like I think this reverts a little bit more. So we have these sequences occurring where some of these names could pull a little bit higher. Some of these names look really gross, but we have no clear structure just quite yet as far as lower highs. Like the Palantir name is a leader that's in a distribution spanning out over the past, 9, 10 months, where I think that this, yeah, we rallied from 65 to 150, but I think this was a terrible buy. I don't think this was a great buy as far as my system and what my focuses are. But we don't have, where are you shorting this at? Unless you're just kind of blindly adding into each new higher high on some leverage exposure. I don't really like that quite yet. Like you need to wait for an opportunity that really presents itself, and there's no clear edge quite yet for getting super aggressive short side, especially on options, right? So that's why I kind of say, you have to be a little bit cautious about how you develop this position. We have a QQQ phantom wick at the open of yesterday's session, so this is going to be interesting. I do think that this is going to be very interesting. I do still like XLE. I'd like a little bit of a strong daily candle closure. This gives you that nice reversal off low of day, about 1%, and then we see a higher low being put in, and potentially if we can reclaim the top of this April 3rd closure, I do still like this sector. A commons trade though, well, I will say ERX is a pretty good vehicle, but this is a really slow mover. I mean, like 6%, you know, if I'm trading commons, I'll take that extra risk for a little bit more of a reward on a slower moving sector like energy. But VLO, reclaiming, higher highs and higher lows, break a structure, higher low. Like this is a clean looking um chart at the current moment in time for commons where you can, add, trim, maybe add some more, maybe not. I think energy is still good. I think a commons trade is the best route though. So that's about it. I mean, we have some consumer staples. I will say PEP looks really good. We have a report tomorrow morning. This is very coiled up on some really nice volume pouring in down here, especially off of June 27th, coming off of the 2021 lows. And just a lot of climaxing going on down here, right? As far as like sellers really stalling. And I think it we should see 141 at least. After that, we'll have to see how this develops. But a notable underperformer, like I said, undercutting those August low or April lows, right? Like that's a pretty pivotal thing. And this is a name that could be seeing a rotation. But I don't really, sit here and want to trade 10% PEP shares trying to time the bottom off 128. I think it's more or less a gauge for what's to come potentially. Kroger actually looks pretty nice on this little 2-day inside bar pattern off of the. Um, I mean, this thing just keeps chugging, but off of like the earnings report, pretty nice move, a stall. We have the higher low, and then an internal structure developing here. We'll see. We'll see how some of these do. Dollar General is really coiled up right now, but I don't really. Mo looks pretty good. I mean, this is one of those. I already fucking talked about this. Yeah, I already talked about this shit. But yeah, I mean that's pretty much it. Like First Solar shares are cool, but this is a buy trim. See if we can push 200. It's not really like set the trailing stop. I don't really have like it's to me personally, it's slamming ideas that you're super confident in, and I'm super confident in Nvidia short exposure via leveraged ETF into Q3, targeting the lower $100 area, and SPY January is targeting 580, 600, and 564, right? Those are the names that I'm super confident in the trades. And so I think those are the opportunities that I would want to slam, right? There's these other ones that they're just not as high confluence, high conviction, right? And you don't really want to slam those, right? You never want to get attached to a trade, but I'd rather lose money on something that I was very confident in that didn't go my way than lose money on something that I knew was a subpar opportunity and I just kind of threw some shit on there because I was bored, personally. But we do have the orb high being failed right now and some volume behind it. We have QQQ at the opening print of today's session and sitting at the July 3rd high. So this will definitely be an interesting closure. Like I said, I think the risk to reward at the current moment in time definitely does stand for having a little bit more of that short exposure from the 625 trade, 626 trade, but it's nothing based on the way that that volume poured in at that I would be super super confident in, right? Like I said, it all depends, right? Um, so that's pretty much it. Just a quick little update, right? Obviously this panned out. We never saw 625, but we see the breakdown to 618. Obviously, the ideology that I had this morning kind of panned out, but the way that it happened, I feel like I was, I owed a debt to kind of update the positioning that I would really find optimal here, based on how this happens, because it all is, it's all it is when it comes to trading is, I have an idea. I think this happens within this time frame. But if something changes that thought process, you have to be able to flip on a dime to, either another perspective or just out of the position, right? If it doesn't feel right, you can't really be in there anymore. So it's a lot, like, it's a lot of mental aspect behind it. But this is something that I would say is I wouldn't blame you if you had a bunch of shorts on shorted dated for cutting your entire position and just waiting to reshort, right? Like I said, the January positioning is a completely different story, but if that's the case, if you're sitting with like a short that you built out up here and you're targeting 620, but maybe 615, I wouldn't blame you for covering it all just based on how this volume pours in. But I do think something fishy is coming up here. We have um, the Nvidia reports not for a while. Google reports next week, right? The week of the 21st. Google reports next week. Microsoft report in a couple of weeks. Tesla next week. Apple in a couple of weeks. I want this at 224. Meta and Amazon both in a couple of weeks, right? Banks, we have a couple more banks to get by, if I'm not mistaken. We have Visa, MasterCard. Um, I think they're all done for this week, if I'm not mistaken. Let's actually look that up. But we have a lot of earnings reports that are coming up that are going to be pretty pivotal. We have a Fed meeting on the 31st as well. I'm pretty sure at least. Yeah, we have jobless claims and Michigan inflation this week. Yeah, we have Wednesday the 31st. We have this GDP PCE and the Fed press conference. So um, that's before the August flows as well, and that's after a lot of reports. So pay attention to this week in your calendar, right? Pay attention to the week of the 28th, right? Because we have the expiration here. Right, let's actually pull up, right? Let's just pull up paint. Let's go. What's the week of the 16th? Or the week of the 14th? 14, 15, 16, 17, 18. Boom, boom. 19, 20, 21, 22, 23, 24, 25, 28, 29, 30, 31, 1, 2. And then we have the week of the 5th, August 5th. Starting there, right? Or August 4th. Wait, how did I fuck this up? 28, 29, 30, 31. Ah, that's why. Alright, so this is expiration. This is OPEX. Right? This is our window of weakness for the broader equity market. This window of weakness plus Tech ER for a lot of names. We do have TSM, Netflix, Pepsi, US Bank this week, Abbott, 3M, American Express. No, so this is our window of weakness. And the Tech ER. This is our FOMC. And then the fourth is, August flows. So, I mean, even if you take a look back at last year during this window, it was pretty interesting. But the expiration, we just saw a pretty big red flag on the 15th and today. OPEX. So, I'm thinking personally, especially after the move we had, if you didn't get to capitalize off the 526 or 625, 626 to 620 short, lay off the gas, maybe see how OPEX goes, but don't know what's going to happen for the rest of the week, right? Now, next week we have tech earnings, and we have that window fully opening, right? Post options expiration for the month. So I'm thinking these two windows, these 2 weeks right here, when things can really get going, right? If we can see, you know, 600 before August, right? Which from the highs is only like a 5% decline if we make a new high. If we can see 600 by August, I think that's very, very vulnerable. I think that's going to be setting up, a really clean macro lower high here that can push us to 580 into September. So if we can see 600 by August 5th, August 4th, I think that would be the most appealing structure developed throughout the entire market, simply because of the fact that this would align with the window that we have, align with the expirations, and align with some earnings reports and catalysts that could really spark that volatility in general. So this is what I'm looking at, right? I think the January position works, but I think the January position is still a much higher time frame exposure, an idea, and 580 is kind of your first target. Don't mind adding it up here. I think we're going to top out in July, most likely. And I know I said that in May to June, but I think July, the way this develops, I think July is really, really confident for me. As a month that we probably top out on. But, my thought process as well is just like the shorter dated exposure should work next week if it does, and the week after, right? Like I think you can catch some good shorts into or off of the reports, especially if we see like a Google gap and we see Google pushing that peg. If we see Apple, right? We have some Apple, the 31st. Meta, right? If we can see Meta maybe underperform Amazon into that peg, I think there's a lot of things opening up that are really going to be able to they give you a clear cut sign on where the directional read is at. And like I said, if we can see maybe not much for the rest of the week, maybe something, maybe a stalled high, maybe a lower high, and we see 615, it can go a couple of ways. Maybe this, and that, or maybe this, something like one of those two directions is my thought process here. And it definitely depends, but I am feeling like that's kind of the read. Now, depending on the daily closer, we're seeing a notable seller at the tape at 524 here on SPY. As far as it stands right now, I do still like the August positioning down to 615, but it genuinely just depends on the daily closer. Like I said, this volume is a little bit concerning. So I think we hit 600 by August. I think that this week is going to be the kind of starting off point for that, and I think those reports coming into play, and FOMC as well, can be a pretty big catalyst for it, the reversal and the decline. But it's all kind of dependent on what happens, right? I think that the shorter expiration, you have to be a little bit more, cautious, right? I think that the shorter expiration, you have to be a little bit more cautious. Continue building out those further dated, or even not even options, even just leverage them for ETFs, and just be patient, right? We have the expiration this week, and we have some catalysts over the next 2 weeks that could really, really get us started in terms of catalyzing and aggressively exacerbating that sell off of some reports and off of some data sets, right? And once these things kind of align, it should be really, really easy. I mean, you see how it happened in February into March before, it was almost a month before we kind of finally found a buyer and started to form out a base. NVIDIA UTAD again, right? This is going to be interesting, in my opinion, right? And I think it's all kind of aligning, personally. So that's my focus, right? My pure focus options wise is solely SPY on 2 to 3 different expirations. We could see a little bit of a weak close here on SPY. I will say the tape's showing me a little bit of a fishy feeling. But that's kind of the read here, in my opinion, on on where the opportunities are options wise, and then comments. I like energy. I like Google. That's about it. So yeah, quick little update.